Imagine waking up tomorrow with a bag full of cash worth millions of dollars. Sounds amazing, right? But there's one huge problem. You can't actually use the money. The second you try buying a luxury car, a house, or even investing somewhere, people start asking questions. Where did all this money come from? And that single question becomes dangerous, because when money comes from illegal activities, criminals can't just spend it openly. That's where money laundering begins. And today we're breaking down exactly how this hidden financial system works. First of all, what is dirty money? Dirty money is money earned through illegal activities. Things like fraud, corruption, drug trafficking, scams, bribery, tax evasion, and other crimes. The problem is modern money leaves traces everywhere. Every bank transfer, every property purchase, every online transaction. Everything creates a financial footprint, and investigators follow those footprints. So criminals came up with a solution: take illegal money and slowly transform it into legal-looking money. That process is called money laundering. Usually, money laundering happens in 3 stages. The first stage is placement. This is the most dangerous step for criminals, because they're holding huge amounts of physical cash. Now, they somehow need to put that cash into the financial system without attracting attention. Think about it. If someone suddenly walks into a bank carrying hundreds of thousands of dollars in cash, it immediately looks suspicious. So criminals use smarter methods. One famous trick is called smurfing. In smurfing, large amounts of money are broken into smaller deposits. Instead of depositing $100,000 once, they deposit smaller amounts over multiple days in accounts. This helps avoid automatic reporting systems used by banks. Sometimes criminals even hire multiple people just to make these deposits separately. Another common method involves cash-heavy businesses. Businesses like restaurants, bars, casinos, or car washes deal with large amounts of daily cash. That makes it easier to hide illegal money inside normal business income. For example, if a restaurant earns $5,000 a day legally, the owner may claim they earned $10,000. The extra money is actually dirty cash being mixed into the business. On paper, everything looks normal. Then comes the second stage, layering. This is where things become extremely complicated. The goal here is simple: make the money impossible to trace. Criminals move money through multiple bank accounts, countries, businesses, and investments. Money might travel from one company to another, then to an offshore account, then into fake loans, then into investments, all within days. After enough transfers, investigators struggle to identify where the money originally came from. A major tool used in layering is shell companies. A shell company is a legal company that exists mostly on paper. It may not sell products, hire employees, or run real operations, but it can own bank accounts and move money legally. Many shell companies are created in countries with strict financial secrecy laws. So, when authorities investigate ownership, they often hit dead ends. One company owns another company, which owns another trust, which is controlled by someone else. The real owner stays hidden. Finally comes the third stage, integration. This is the final step. Now the money re-enters the economy looking completely legal. At this point, criminals can openly spend it. One popular method is real estate. A criminal buys expensive property through a fake company. Later, the property gets sold. Now the money appears as legal profit from real estate. Art is another famous method, because art prices are highly subjective. A painting might sell for millions, and nobody can easily prove its real value. That makes art useful for hiding money movements. The scary part? Experts estimate that trillions of dollars are laundered globally every year, and only a tiny percentage is ever recovered by authorities, which means most illegal money successfully disappears into the financial system. But money laundering doesn't just help criminals, it also damages economies. It increases corruption, raises housing prices, supports organized crime, and weakens trust in financial systems. That's why governments and banks constantly monitor suspicious transactions today. Because money laundering isn't just about hiding money. It's about hiding power, crime, and influence behind a legal mask.